Hello and welcome to Aditya Birla Sun Life Mutual Fund presents Voyage 2022, partnered by ET Now. The 9th edition of Voyage, with the theme India Navigating with Resilience, aims to create an even greater impact on strategic thinking and charting the course for the new decade. And on this first episode, we bring you some of the highlights of the event. First up, we have the MD and CEO of Aditya Birla Sun Life AMC, A. Balasubramanian, giving the welcome address.
Distinguished guests, our media partners, my dear colleagues, and all those who are tuned in, a warm welcome to each one of you to the 9th edition of Voyage, Aditya Birla Sun Life Mutual Fund Annual Investment Conclave. Voyage, our flagship event, has become a brand in itself. Looking back at our journey, we started with a humble gathering of 500 participants in the year 2014, which has now spread its reach to beyond 10 million digital audiences from across the world with the help of our media partner, ET Now. Let me take this opportunity to thank each one of you for taking your time out to attend our signature event and for your continued support and association with Aditya Birla Sun Life Mutual Fund. At the end of 2021, the world economy was on the track of recovery. Governments, central banks, and world institutions around the world, through calculated policy measures, had navigated the rough waters of the last couple of years quite successfully. Businesses and people had adapted to a new normal. Old supply chains were being restored while new supply chains were being established. Just as everything was going back on track, the unexpected geopolitical tensions between Russia and Ukraine have threatened to derail the global economy, which has now resulted in the uncertainty of markets and also global economic recovery. These tensions have led to disruptions in global supply chains, which have led to supply chains constraints and therefore having an impact on inflation. Markets, of course, have factored in the geopolitical development and also factored in the possibility of resolution sooner as it can be seen from the recovery of the global equity markets. And the commodity prices should also ease up once the tensions de-escalate. There is a possibility that we may see the world economy move from globalization to regionalization, with the countries looking at alternate sources of resources and geopolitical playing a greater role in shaping the way forward. To help our investors and distributors understand the economy and markets and make sound investment decisions, we at Aditya Birla Sun Life Mutual Fund, through our flagship annual event, Investment Voyage Conclave, wish to provide insight on the economy and the market outlook by inviting industry experts to share their rich and unique knowledge and experience. Like every year, this year too, we have an exciting lineup of speakers and panelists comprising of policymakers, global industry experts, thought leaders, along with our team to share their thoughts and views on India navigating with resilience. We are optimistic and bullish on the growth prospects of the Indian economy and the Indian market in general. In this edition of Voyage, we want to showcase our resilience through the tough times we have faced in the last 3 years, and the optimism we as a fund house has on the growth potential, opportunities, and trends of the Indian economy and the domestic market. I am sure the factors that will drive the growth of the economy will be elaborated on by our CIO Mahesh Patil, along with our co-heads equity and fixed income over the course of the event. Let me now apprise you of the latest developments in the mutual fund industry. The mutual fund assets base, as is known, has grown and reached a total size of 38 lakh crore average assets management as of December 2021. The industry has attained scale over the last few years due to increased financial awareness and higher digital penetration through our business partners. While the ongoing geopolitical situation continues to cause uncertainty, it can't go on for too long. Any resolution that is arrived at will sharply change the economic outlook and the result in the normalizing of commodity prices and the growth expectations. On the fixed income side, the market will mainly be driven by federal policy and domestic monetary policy actions. With the expectation of rate hikes in the near future, we expect to see a significant pickup in even credit demand, which will result in boosting the economic revival. In addition, higher tax collection of both direct taxes and GST on the back of better compliance should help the fiscal as we move forward. This gives us ample reasons to be bullish on India's longer-term growth and its prospects to emerge as a strong winner among the rest of the global economies, and at the same time gives a business an opportunity to grow and navigate through market cycles. We at Aditya Birla Sun Life Mutual Fund are extremely committed to participate in India's growth story, while also being a thought leader and large player in the Indian mutual fund industry space. While market goes through cycles, if one carries a longer-term focus on wealth creation and maintains the right asset allocation without being influenced by the short-term fluctuations, there is a meaningful gain to be made from mutual fund investments. It will continue to be one of the best vehicles to invest in the market, providing a comprehensive solution to investor needs based on the financial goals and risk appetite. Asset allocation is an important investment mantra at any given point of time. The solution offered by us under 4 buckets, savings, income, wealth creations, and tax savings, are designed to take care of the asset allocation needs of the customers. Investors, of course, have to keep in mind the long-term investing as a guiding principle while building their equity portfolio. We strongly advocate having a good mix of large cap funds, flexi cap funds, and balanced advantage in the portfolio is key to bring in success in the overall portfolio action. The Voyage conference over the next 2 days will give you more insight into the economy and the investment scenario in general. As I mentioned earlier, all the speakers are subject matter experts who have rich expertise, rich experience in the respective field. I am sure the sessions will provide a valuable insights. I also extend my compliments to ET Now, our media partner. I would like to take this opportunity to say that we will always remain humble and stay committed to our investors and partners and shareholders and deliver commendable performance to be a leader in the industry in managing assets and the risk, expand the market and deepen financial institutions in the country. I wish all of you and your families good health and happiness.
Next up, we have V. Ananta Nageswaran, the Chief Economic Advisor to the Government of India, talking about policy making in uncertain times and the way ahead for India in the decade to come. Let's listen in.
My first question to you, sir, is that post-COVID, if you remove the base effect, actual real rate of growth has been hovering between 0 to 2%, while the inflation has been struggling around 5 to 5.5. Now, this looks somewhat intuitively wrong that despite moving significantly away from the trend growth in GDP, our inflation has not come off. So do you think we have a serious constraint in terms of capacity? And where do you think the potential growth for India incrementally after COVID?
Yeah, that's a good question. Of course, I wouldn't necessarily take a look at the growth rate from 2019 to 20 and then say that, the real GDP growth is only up about 2%, but inflation has been between 5 and 6%. And we all know that some of the inflation has arisen globally and in India as well. Initially, last year, it was the impact on wholesale prices, which is now feeding through somewhat into retail prices. And on top of that, we have, energy-related transition, which was held in abeyance for a few months. So I think I wouldn't call it a serious problem. All countries are grappling with both the challenges of maintaining growth rates, while everybody had bounced off the lows of 2020. And in our case, 2020-21. At the same time, inflation issues are coming up because of supply constraints in many commodities and also food items. And now energy has joined the fray. So this is a challenge that is globally present, and India is facing it as well. But I would still like to say that the Indian economic story is a glass that is more than half full, because overall, given the constraints we face, we have managed the fiscal transition and the challenges, the growth dynamics, and also inflation isn't raging as it is in some countries in the Western world. So overall, yes, I agree with you on the characterization of this as serious challenges, but I wouldn't call them debilitating challenges because I believe the glass is more than half full.
We've been saying that this is India's decade of growth, and it has to be growth at all costs, right? We've been getting that. If there is one threat that we're having, and you touched upon a little bit, which is consumerism, while we're seeing revenge shopping, revenge dining, revenge travel. So, I'm going to ask a question on behalf of the Aam Aadmi, and that is with inflation, with Mengai, well, how will the government really help? For example, just look at crude oil. You've not even provided any relief when it comes to excise duty cuts. A lot has been said. Is anything going to happen on that front?
I understand it is important to not analyze these things in a piecemeal fashion. If you look at the government, indeed, last week extend the Prime Minister's Garib Kalyan Yojana for another 6 months, and that is 80,000 crores. And even now, the price of crude oil and the energy shock is a global phenomena. And to some extent, if the government were to sort of focus on excise duty reductions as well. And as you know very well, the fertilizer subsidy will naturally be going up because of crude oil prices as well. So on top of the extension of the Garib Kalyan Yojana for another 6 months. Now, if you also talk about energy excise duty cuts on fuel products, etc., then to the extent that it has an impact on the fiscal balances, then the cost of capital would rise, which in turn will affect all kinds of corporate borrowings and also the interest rates that consumers face also. So consumers will face the cost one way or the other. And therefore, that is why I said it's important for us to look at this not in a piecemeal fashion, but holistically.
How ready is India for potential next leg of crisis, given our debt to GDP is very high? And second, given that debt to GDP is very high, the capex piece is going to take a back seat. Even in last fiscal year, which is 21-22, government was not able to meet its total capital expenditure targets. So if that is the case, then how can both consumption piece and capex peaks can be a driver of growth over short to medium term?
Look, I mean, there will always be execution challenges, but incrementally, if you look at the last several years, government's actual capex expenditure, even if it has fallen short of the projections, has been on an uptrend. And yes, and to the extent that the government has budgeted for 7.5 lakh crores of capex, which includes 1 lakh crores of interest-free loan to the state governments. And if there are some shortfalls, which may be possible, but nonetheless, the trajectory in terms of actual spend is upwards, and that's important to keep in mind. And several state governments are also improving their quality of capex expenditure. So, I mean, in terms of the budget debt, so the debt dynamic is something that has deteriorated far more in several other countries. And as far as India is concerned, its response to the pandemic in the last couple of years has been one of gradual and calibrated fiscal intervention. So it hasn't overspent and overstretched itself. And much of the increase in the ratio has been due to the denominator shrinking in 2020-21, the GDP. So, and as long as nominal GDP growth lies above the nominal interest rate or its real counterpart, real GDP growth being higher than the interest rate, our debt sustainability is not in question at the moment. So it is going to be, it is very difficult to, in this situation, as the survey pointed out, when shocks are coming one after the other, it is very difficult to give you unhindered 3 to 5 year path. But what is important is that we remain opportunistic in terms of grabbing growth opportunities. For example, whether it is agricultural exports or whether it is services, IT services exports in the current environment, and also even 2021-22, because of the global rebound from the 2021 contraction, it also helped India's exports to scale $400 billion. So there has to be opportunistic attempts to capture growth dynamics in critical areas, and also carry forward the structural reforms that are needed. Much has been done in that area, from Gati Shakti dashboard to ending retrospective taxation to privatization, etc. And at the same time, continue to provide fiscal support in a targeted way. It is going to be a tightrope walk. That is what many governments around the world are facing. India is no exception. But our track record in the last couple of years or more has been that we are managing this tightrope walk quite competently. So I thank you very much for your conversation. I wish we could stay long and explore more questions, but thank you once again. I enjoyed the conversation. Thank you.